you have to have thick skin.
Yeah.
I worked for a woman that used to look at me all the time and go, turtle up. And she taught me more about leadership and life than any person I ever worked with.
Well, welcome to the ERM Advantage podcast. I am Eric Holmquist. Today, I'm very excited to have a good friend and colleague with me here today, Sam Pepper. Sam has had a distinguished career in the financial services industry, a lender. He's been a former CEO, an advisor. And so I'm very excited to be able to be there today and talk about the industry and your lessons learned. So, Sam, thank you for being here today.
Thanks, Eric. I really appreciate being here. Distinguished, I don't know. Thank you. I appreciate that. But I've had a long career. Let's put it that way.
Well, we've got a bunch of different things we're going to talk about. I want to take advantage of, obviously, your formidable experience, particularly as CEO, which is obviously a key and critical position. A little bit of just lessons learned, observations, thoughts. We'll talk about the industry, and we'll talk about the way the winds are shifting in the industry. And then also you do a lot of advisory work even in not just banking and strategy, but risk management. So given that that's an area that I have some interest in,
Yes, you do.
We'll talk about kind of where risk management's going and some what you've seen with your clients. So let's just dive right in. I want to spend a few minutes sort of in the CEO's office, in the CEO's head. So again, having served in that role, just kind of give me your general observations from your time as CEO and what was that like?
It was the biggest learning experience I ever had. Was sitting in that chair, and I think one of the reasons, and I heard or I read something the other day about Jamie Dimon talking about it. You realize that you're there, you're alone. I mean, everything stops with you. The decision-making all ultimately rolls up and you have the final say. What I did learn from that process is not to overthink it, not to take it too seriously, because if you do, you alienate people. It comes back to pure leadership skills and traits that are be humble, be kind to people, understand you don't have all the answers. You may have ultimate decision-making say, but you don't have all the answers. And I think once you come to terms with that, it makes life a little bit better.
Yeah, and I think every situation's going to have its own unique attributes and environments. And obviously the first part is just figuring out what the landscape is and how you will. You're not going to come in and change the culture overnight.
No.
So you've got to figure out how do I fit within this culture, bring something to it and possibly influence as I need to. What would you say for any aspiring CEOs outside of talking them out of it? What would you say? How would you characterize is kind of the attributes that make a really good CEO and really even it could be a good C-suite candidate?
Yeah, I think that's pretty simple. It's one, being humble, understanding you don't have all the answers. It's assembling a really good team, being okay with people that are probably smarter than you, may know more than you in certain areas. It's about creating a team that can work together. And I think that's the most critical part is building that team and building the relationships within that team. And it starts as the CEO beginning to build it. I always said, I'm not going to have everyone over for Thanksgiving dinner, but I need to get to know them at a personal level as well as a professional level. I need to know what makes people tick and then leverage their skills and shore up their weaknesses.
Yeah, and you hit on a point that I occasionally come across, and this is really true of anybody that's going to be in a leadership role is there's one mindset was I want everybody to fear me. One is I want everybody to love me. And I think it'd be fair to say that both of those to an extreme, you're going to get shot by your own troops at some point. So there's an equilibrium there. And how would you encourage the equilibrium between they should fear me, they should love me?
It's finding the middle ground.
Yeah.
And it does go a little bit back and forth. There's times when you really do have to show folks that you do love them from the standpoint of it's okay.
Yeah.
It's okay to make mistakes. It's okay to learn from it. Don't do it time and time again.
Right.
Because we have
right.
another conversation. The fear factor to me, there's always a little bit of that in there. It needs to be, and I don't. Maybe it's fear. I don't like the word, but respect.
Yeah.
Of my decisions, my position, and me as a CEO.
Yeah.
And it's a two-way street. I need to respect them. I think to your point, I mean, it's really found somewhere in the middle. Now, you have to be able to go back and forth on that spectrum. You just don't want to go too far either way.
Right, right. And obviously, there'll be circumstances that dictate one or the other. And what I've always done is I've been advising, particularly like CROs, a newer CRO. I mean, the CEO has a fair amount of authority. And a CRO can, in a model they can. And I'll get into this in other, podcasts, but I've really encouraged, particularly people in a CRO role, to try to the best they can to lead by influence rather than authority. And I'm assuming that's probably the same for CEOs. Yeah, you got authority, but are you going to be more successful if you really lead by influence?
Absolutely. Absolutely. I learned from a chief credit officer years ago that he had the ultimate authority when I was a lender. I mean, the decision stopped with him. And I never encountered an individual that asked more questions than he did. And it wasn't because he didn't understand. He was trying to get you to understand where he was coming from.
Yep.
And the attributes of things that maybe you hadn't thought about. So he was trying to bring you to the answer that he was going to ultimately give you. And that was the time that taught me as a leader, it is about influence. If you have to drop the hammer all the time, something's not right.
Yeah.
You don't have the right team. Maybe you're not the right person for that position, for the circumstances, whatever. Yeah. But it is about influence. Absolutely.
The old Ted Lasso line, stay curious. And I think that's good advice. I mean, I've always tried to follow that. I always want to be a student. The more I learn, the more I know I don't know. And
absolutely.
It's liberating when you finally realize that I know a lot. We've been around long enough. We know a lot of stuff, but doggone it, if I don't learn something new every day, and I think we'd have to appreciate that. At the end of the day, and again, kind of where this comes from is, of the CEOs I've known, I think it would be fair to say that if I asked 10 CEOs, what is your primary job? I may get 12 answers.
That's true.
So I don't think there's an absolute answer, but what fundamentally is the CEO's primary job?
In my mind, it's twofold. It's working to set the strategy on where the company is going and defining the culture. I think without those two, you're just spinning your wheels.
Absolutely. Yeah, well, and we've talked about this before. Even when it comes to like risk management, it lives and dies on culture.
It does.
And this is something I've wrestled with: is if you've got a culture, I mean, you're going to have a variety of personalities, philosophies, priorities, and you can't make it all one thing. We have to respect people have individuality. But what I'm hearing is part of the CEO's job is figuring out how these different cultures are going to be one culture and
together,
have it make sense.
Absolutely.
And have them not fight. And later on, I want to talk about how this plays into strategy, because it has a tethering point. But I've always admired, CEOs, and it was one thing I immediately admired when I met you as CEO is you're willing to servant lead. You're willing to listen. And I find that the CEOs that listen the least succeed the least.
I would agree with that.
Because at the end of the day, again, I want to hire people smarter than me. And again, I'm not saying that big egos don't survive. They do. Many companies have been very well built with monster egos. I mean, look at Jobs.
I've worked for a number of them.
Jobs was known for having a massive ego and didn't play well with people, but I think at the end of the day, I think it's a much more sustainable model if people feel like they're appreciated.
I agree.
You
I
know?
agree. Listening is one of those skill sets that you learn over time. And when I started in banking back in 1982, I've been around a long time.
God, you're old.
Yeah, I am old. The guy that hired me was a mentor for many years, and still to some degree is a mentor. I still talk to him. He was young when he started as a CEO at KeyBank in New York when I was there. But one of the things he taught me was two things, I should say. One is be careful who you step on the way up because you meet them on the way back down.
Yep.
It took me a long time to figure that one out. The second was as you progress and climb the ladder into leadership positions, particularly as you get to the C-suite, your technical knowledge needs to be less. He says your leadership and your management skills is what you need to fall back on and or develop and continue to develop as you move forward. You hire people with the technical skills. It's really important to develop those leadership and management skills so that you can create culture, create trust, create teamship, I'll call it, to bring these people together to work as one.
And then kind of going down that vein, how much of the CEO's job is in simple terms, to be kind of chief cheerleader, chief evangelist? I think people like to feel they're part of something. Now, in a perfect world, the whole leadership team is doing this, is helping people feel like they are part of something. But how much of that is the CEO's job?
Oh, I think it's a big piece of it.
Yeah.
The need for people to feel things are positive is human nature. You like the positive feeling. It's the old adage of if you're working with people and your approach to it is the beatings will continue until morale improves. It's the old Charlie Brown syndrome. Eventually you hear blah, 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 blah,
right,
blah, blah.
Right.
So they want to work with someone that's positive and work for someone that's positive and keeps things in a positive spin. You can take negative situations and turn them into positive. Just today, when you look at the banking sector and say, wow, there's a lot going on. You know what? I think it could be a lot of fun starting over again.
Yeah.
If I were a young man starting in banking again. There's so much out there because it's all challenges, and challenges are positive. Don't make them negative.
Yeah. Yeah. And we're going to obviously very quickly here move to the industry and all that. And you're absolutely right. The sands are shifting, and that is both, opportunity and threat. So it is, if nothing else, an interesting time. So may we live in interesting times, and we certainly do. We are going to talk about the board and relating to the board, but I want to hold that because we're going to talk about governance in general. So and that's a whole nother can of worms. But other than that, any other sort of words of wisdom for the CEO and the C-suite?
I think it just comes back to the oversight of or overlay of what we've already talked about on the CEO side and on the C-suite side. It's developing trust. It's having empathy. It's teaching people and knowing that they have as much to teach you as you have to teach them. Young people teach me a lot and have taught me a lot over the years. Just because I'm old and have experience doesn't mean I need to stop learning.
Well, and let's face it, with the advancing of some of this technology, we're all learning because this is uncharted in some ways.
It is. And I think to your point earlier, one of the big things is be curious.
Yeah.
Be curious. Ask lots of questions. Make sure you position it that it's a learning experience. It's not because you doubt it. You need to understand it.
Well, I like what you said earlier is, when things go, all differently than you thought they would go, what can we learn? The best organizations are always learning environments.
Absolutely.
And they celebrate learning. I had a good friend of mine who went to work for Microsoft, and he said it was amazing. He says, you literally can't get promoted until you really screw up because you need to be able to stand up in front of your peers and say, what happened? What did we learn from it? What are we going to do differently? And how did we get better because of it? And that, to me, is a great leadership lesson.
Absolutely.
And I think organizations that, when things go sideways and we try to bury it, you're never going to get better as an organization.
You're not. Or you try and point fingers as it was your fault, not mine.
There's nothing worse than an environment of blame.
Take ownership and move forward.
And move on, yeah. So let's, and this is great because again, I think it's a tough role, mainly because, like you said, all the arrows are pointed at you. And on some days you're the hero, and some days you're the goat, and you just better accept that. Do you see any sort of key headwinds for CEOs, or is the world changing in any way, or is there anything kind of horizon that CEOs should be aware of? And maybe that goes to ongoing education, maybe that goes to training, but
I truly believe in today's environment, it's really centered on CEOs understanding how the environment is changing and what's coming at them. Being curious and making sure you continue to learn and understand, because as we've talked about outside of here, this is an interesting environment for banking. I mean, there's between AI, just technology in general, the regulatory world, the M&A that's going on. I mean, there's a lot coming at bankers.
Absolutely.
You have to be open-minded, and you have to be curious and try and filter through a lot of the noise to get to what the real issues are or the real challenges.
I absolutely agree. In fact, there's a related point that we'll come back to in a bit, and that's so true. And so it's a sort of a good teeing ground to kind of talk about the industry. And as you said, a lot of emotion, a lot changing, and I've been talking about this for some time. Just give me a sense, where do you see the industry at right now, and what do you see kind of going on that you think is interesting?
The M&A side I find very interesting, the continued consolidation.
Yep.
I find that extremely interesting. Some of it I truly believe is driven by the investment banking world. And along with that, the industry, again, I had a chief credit officer many years ago when I was at Mellon Bank back in the early 90s, say this is a herd industry. We tend to follow the herd. And you can, if you go back 30 or 40 years, you can even longer than that, you can see how the industry has followed different herd mentalities. And I think right now some of the M&A is driven by that. It's just doing the M&A to grow market share, get into a market you thought you needed to be in, and the investment bankers are telling you it makes total sense to do it because the financials that they're showing you and the returns are just what you need.
Yep. Yeah. Is some of that, you think, going to be fueled by some of us old guys that are at some point are going to sail off?
I think with the community bank sector, I think that's a lot of it.
Yep.
They're tired. They're ready to go do something else. They haven't done enough work around succession planning to have someone that can move into those seats. I've talked to a lot of different banks in the last year or two that are hiring outside because they haven't done any succession planning.
Yep. That was surprising. I mean, this is not a surprise.
It's not.
People are going to leave. Something you might want to have thought through at some point. Mm-hmm. And I'm always surprised. And like, oh God, what do we do now? Mm-hmm. Really? This is the first time you're considering this?
Mm-hmm. There's a lot of that goes on. So, I think the investment banking community is capitalizing on that. The regulatory environment has eased up from an approval standpoint, or at least it appears that way with the turnaround that some of these banks are experiencing while they're looking for the approval or getting the approval. So I think that's driving part of it. But is some of it being done for not necessarily the wrong reason, but maybe not the right reason?
Yeah.
That's my question.
Yeah.
And do banks typically look at culture as part of that?
Yeah.
Some do, some don't.
Yep. I've seen the ugly side of that. If you don't think about it, don't be surprised when everything goes rough.
I've seen more acquisitions, not just in the banking side from a client base standpoint, as I've banked clients over the years. I've seen more acquisitions fail because of culture that didn't work than the financials.
Yeah, a year or so ago, I did some work for a bank that did a major acquisition that I guess on paper looked good, but it did surprise me because these were spectacularly different cultures. One being a fairly conservative, regional, super regional, and one being a very aggressive, you could see the chafing happening And I thought the problem is that's not going to go away. You're not all of a sudden going to decide you're one or the other. So how do you kind of live together? Do you think it's a good time to open a new bank?
There's a fair number of de novos that are kicking off and have in the last year. I think it might be. I mean, for the right reasons. Again, I think it comes back to having a well-defined strategic objective. Have you defined what you're going after in order to open a new bank? What kind of a niche will you serve? I don't think just opening a bank for the sake of creating another bank is the right reason. We're seeing consolidation for a reason too.
Yeah.
There's too many banks.
Yeah.
But I think it could be.
Yeah, and certainly you got a couple things in your favor. You've got an administration that, again, has shown a lighter regulatory approach. So that certainly helps. I think some capital is starting to move. That could be interesting. Interest rates coming down. So it does seem like there's a somewhat fertile ground in some ways. Wanted to go just a slight deviation here, but because you've got also an extensive credit background, and anybody I know that is from credit, of which I know enough to be dangerous. I know in COVID, one of the things we were concerned about is obviously it reshaped the use of commercial property. And we discovered we can work from home and life goes on and nobody dies. And so, we saw a move towards more virtual, more hybrid models. And there was some concern for some time that, obviously commercial leases or long-term leases was this a ticking time bomb that all of a sudden we're going to approach a point where there's a massive amount of property that nobody wants. It seems like that kind of hasn't happened. There has been certainly a reduction in demand, but not to the point where it's causing credit quality issues. But again, I may be completely missing it.
No, I agree with you. I think the expectation was we would have another 2008 in the real estate market. And that wasn't commercial real estate as much as it was residential, but it was all impacted. But I think the expectation was that's what COVID was going to create, because no one was ever going to go back to the office. We're working from home now forever.
Yeah, and that would have been a different animal.
That would have been a different animal. That hasn't happened.
Yeah.
I mean, it's still shifting. I think the shift is just going to be slow. That people are going to go back to the office, but I would envision it that they'll go back and it'll be 3 days a week in the office and 2 at home, something to that effect, for a good segment of the working population.
Okay, so there isn't some sort of latent contagion in credit quality of
I don't
all of a
see
sudden. It just doesn't feel like that. And I thought the advantage is that these leases obviously turn over time, because there's a certain sort of smoothing effect anyway. I do still have questions about, because for a while there was a lot of unrealized losses, particularly in some treasury holdings and things, and that you just need time to sort out. That seems like could have been a contagion, but it would take a catalyst to push that. And it did with a couple of banks that, again, they were over leveraged and they paid a price for that. But again, there's always headwinds. There's always challenges. There's always rocky waters. This is welcome to the world of a bank. But it seems like, at least from the environment standpoint, I'm not seeing anything that is this sort of horizon existential threat.
I don't see it either. You do have certain banks will be over leveraged, and DC is a perfect market where I live, is to make that comparison to the rest of the country. DC has a lot of real estate dependent upon the government.
Yep.
A lot of those have gone away. Jobs have gone away.
Right.
It's being absorbed. It hasn't taken banks down. Yeah. And quite honestly, you and I both know this. The credit takedown of a bank takes time. Banks fail over a long period of time, and usually they end up being acquired, or the regulators take them over and force a sale long before they actually fail.
Right.
So the credit process takes time. I think we're seeing that. We're not seeing the market just crash everywhere around us.
Yeah, and that I agree with. And so if there's an existential threat, then maybe that plays to then the next part of the conversation, which is the non-bank side. So let's talk about the fintech world a little bit. So as I've said in prior podcasts, that fintechs divide into those that you can partner with that can bring better, faster, cheaper. That can be good, useful partners. There's those that are trying to compete with banks and be banks. So this is very much a to be determined net. But give me your perspective on the fintech world and how much of this is opportunity and how much of this is threat.
I think a lot of it is opportunity. I do. I think that community banks are starting to realize that the adoption of technology, they don't have to take it on themselves. 10 years ago, we were all looking at it going, how are we going to have enough scale to invest in technology to keep us relevant and keep us competitive? Now you're looking at a good many fintechs, probably half the market. I'm making numbers up. I don't really know, but a good segment of that market is partnering with banks, and the community banks are realizing what a great way to go. I don't have to build it myself. I don't have to create it. I don't have to invest. The only investment is renting the technology or buying the technology to use, and I think that's a real plus.
Yeah, I agree.
Fintechs competing, I still think that's an interesting world.
Yep.
I don't know where that one's going to go. They're all talking about buying banks, trying to get that bank charter. You see some of it. I haven't seen a tremendous amount of it. And I think part of that is once they realize the regulatory world they're living in, they're having an oh my God moment.
I've seen it a couple of times with a fintech that they got knee deep into the regulatory requirements and they went, oh my God, this is a lot messier than we thought it is. And welcome to a regulated environment. And, for a while, again, the discussion was, are we going to be fighting against Apple Bank or Walmart Bank or, whatever. And, to me, it seems like there's a place for non-bank banking. I don't know that I've seen it, again, as an existential threat to the industry, but a lot's in motion. So let's continue on this rail. And we talk about motion and change. There's a couple of other elements. AI. This is everybody's, thinking about AI. And in my prior podcast, I sort of broke down some of the different aspects of it. And, my position has always been that this will change banking in some ways because it creates some opportunities. I don't know that I see that as revolutionary, but again, you worked with a lot of banks. So, what do you see as being AI's impact, to the industry?
I don't think the community banking sector has scratched the surface yet with it. I think they're just beginning to see and realize what AI has to offer. Most of us, including myself, until you really experience it, you're afraid of it. I mean, not that long ago, I had somebody say to me, just try it.
Yeah.
Go get ChatGPT and try it.
Right.
Don't be afraid of it. And as you become familiar with it and become comfortable with it, I think you realize that there's a tremendous amount of opportunity to add it in with a bank to use it as a
tool.
A tool and make you more efficient.
Yeah.
I mean, does it eliminate jobs? It may. It will.
Yeah.
It will eliminate, some entry-level jobs, maybe some staff jobs, those types of things. A friend of mine that's working at a consulting firm said to me, he does a lot of strategy work, and he said, I really love it because I eliminated 2 bodies. I don't need 2 people to support me anymore. I can do most of it, 95% of it on my own using AI. So I think it's an efficiency tool. The question I have is something you brought up on your podcast is, can you get it to a point of using it as a predictive tool? And I think that's where in credit, in some of the areas within a bank, at some point AI is going to play a role in helping be predictive as to what they should expect.
Well, and one thing is obviously proven valuable. Things like, transaction monitoring, it's, proven pretty useful in being able to identify subtle patterns that we might have seen. Again, it could be credit, could be financial crime. I think that's using it in a very smart way because it has the ability to ingest a lot of information and look for those patterns. And as you say, get to the point where it can say, hey, here's something you might want to think about. And I'll if I challenge one of my postulates, which is the line as I see it is I don't see us getting to a point where we let the AI make its own decision and implement its own rules. I just don't see that happening. Not in our lifetime.
Not in my lifetime.
And
I just don't see it.
I think if I was going to try to articulate a fear factor, that would be it. If we ever said, go, Skynet's here, that's the fear factor. But I don't ever see that happening. And therefore, one of my comments was, I think if anything, I fear loss of quality more than loss of control of people saying, I'll just take whatever ChatGPT said and just go with it, and realize these agents make a lot of mistakes. I've seen some real garbage come out of them.
It's the old adage in the technology world, garbage in, garbage out.
Yeah.
And I think AI is no different. That I've had numerous people say to me, we love using it. It's a great tool, but it cannot go unchecked.
Yeah. Yep. I agree. And we got to talk about digital. And I broke down in a prior podcast a distinction between two things. One, coins, Bitcoin, Ethereum, all that, and the technology. And I think there's a place for technology. And the different use cases, the coin that's tethered, a stable coin, a crypto, and a CBDC, the latter of which is just dumb. So the way that the wind seemed to be shifting, and I like the administration is considering a scenario where there's a place for a blockchain technology. I think there's some really interesting use cases, and possibly a space for a stable coin, particularly for some payments applications, things like that. This is all very toe in the water right now, but again, check my thinking here. I think to say that we'll never have a digital element to our financial ecosystem, I think is fighting gravity. The question is, what is that, and how does that change things, when we're going from just a pure Fed-based dollar only to more of a wallet-based, multi-currency environment? I mean, how does that change this industry?
Oh, tremendously. I mean, it flips it over on its side. But I think that's a long-term process. The old adage, when you say never say never. I've lived by those words.
Right.
Never say never, because you don't know what's coming. The technology is coming. It's going to be, it may look different 10 years from now. It may look materially different on the blockchain. But do I think banks and companies, they're already adopting it? Many companies are. Some of the large banks are already using it. So it's coming. We just need to understand it and determine whether it's something from the community bank side that we can adopt over time, and what it's going to look like, how it's going to impact us.
Yeah.
But, the industry has changed a lot in the 40 years I've been in it.
That it has.
I mean, a lot. And that's going to, the one constant you can always count on is change.
Right. Well, and again, check my thinking here. I've observed that all the major service bureaus are all working on a wallet offering. In many ways, for now, this is an answer demanding a question, but again, it's only because the inevitability. This is where it's going. Is in many ways a wallet is a way more efficient platform for a multi-currency environment. So again, I don't see this as something that every bank is going to jump at tomorrow and say, "My God, we have to have that." But I think every bank should be at least talking about this and looking at it, talking to the bureaus, talking strategically and saying, how could this be a part of our environment?
Absolutely.
And what could it look like?
Absolutely. I think, the bankers associations, both at a national level and a state level, need to have some involvement in that to help banks understand what's coming, to help them with the research and use them as a tool to learn about it, because it is coming.
Yeah, I just can't see a scenario where somebody says, "Yeah, we're just never going to do that." To me, start the clock. I mean, I think there's decisions about to what degree do you participate in some of these other platforms. I don't think it's a scenario where it's like, "Yeah, we're just not going to do that."
No, community banks will have less of a need for some of this technology, at least at the front end. The big banks are already looking at it, already participating and trying to figure out what's next.
The question is, how much as that becomes a differentiator? So we'll come back to that. We're going to pause here for a very quick commercial break, and we'll be back in 60 seconds.
One of the most important questions you can ask about your enterprise risk management program is it helping you make better business decisions? Or is it simply taking up a lot of people's time without creating any value? Is it helping you gain a better understanding of your business? Or merely documenting what you already know? The tools and resources available from ERM Advantage are built specifically to help any organization get the most out of their risk management programs. We have the largest library of free content covering proven best practices in enterprise and operational risk management. We have developed industry-leading tools and templates for every aspect of the program, including risk appetite, risk assessments, risk monitoring and reporting, and so much more. All available at a fraction of the cost of developing these tools from scratch. We are ready to assist you with program development or enhancements, board or leadership training, or reviews of existing programs. Contact us today to see what best-of-breed risk management can look like in your organization.
Welcome back. I'm here talking with Sam Pepper, and we're talking about kind of the industry and what we recognize is a myriad of changes, and obviously that will take years, if not decades, to really settle what the next generation of banking looks like. I have observed in talking with some banks that sometimes I've seen leaders that are taking a bit of a posture of, yeah, that's interesting, but we're just going to keep doing what we're doing. And some saying, I'm not, we have to radically change. What would you do? Again, kind of putting the CEO hat back on. If you had a divided leadership team where some are just dogmatic, the bank needs to reinvent itself and go after all these new technology things, and some just don't get it. They say, we're just going to keep doing what we're doing. We've been very good at it. At some point, you got to figure out what the story is.
Mm-hmm. Yeah, as a CEO, you have to bring those parties together to find a happy middle ground to make some determination on what strategy is going to look like going forward. To me, the CEO doesn't set strategy by themselves. That's set by the senior team, the C-suite, and it's an agreement between the C-suite on where they think the bank should be putting its resources, making investments, and growing. And obviously, the board has to agree with that as well, with any bank. But I think you have to bring those together to make sure that, again, you're not too far one way versus the other. Just staying pat with what we're doing.
Right.
We're not going to be around for very long. We're just not.
I think that's right.
You earn your independence every day, whether you're a stock-based bank, a credit union, a mutual, whatever. Excuse me.
Yep.
You earn your independence every day.
Yep. Yeah. And I think it'd be fair to say nobody's saying you need to dive in the deep end. Mm-mm. I think there's a lot of ways that the banks will be able to start to incorporate some of these more technology-based solutions and see how it goes. You don't have to bet the bank.
No. I again, come back to the fintechs and what they have to offer. They're the ones that are finding the technology, developing the technology. Utilize that segment for your advantage. That's the way you dip your toes in.
Now let's talk a bit about what is, for as long as we've been in this business, is a perennial challenge, is kind of strategic differentiators. We're selling the same stuff, and everybody says we give great service. Yeah, good for you. How does a bank think about how they differentiate themselves in a marketplace that has a lot of competition?
Well, I think you hit on it. I watched your podcast from the other day, and it's a mantra that I've learned as a young banker, and I've carried with me forever. It's about relationship. It's all about building relationship with whatever your client base is, whether it's a commercial client base, individuals, whatever. Private wealth. It's what the client base you have and how you develop those relationships. I think the challenge is what you talked about the other day as well, which really resonated with me, is how do you take that and develop that relationship in the virtual world? And I don't have all the answers for that by any stretch, but I think that's the challenge, that you have to blend those together and be able to create relationships with people and allow it to happen through the virtual contact point. Yeah.
And it's tough. One of the things that has surprised me, and again, I'm not naming names with who I bank with, much as I might want to, but I'm often surprised when a change happens, and I find myself asking, did anybody look at this through the customer's perspective? Mm-hmm. And look, maybe they just hate me. I wouldn't blame them. But is it fair to say that the banks maybe could do a better job? Back to the relationship thing of maybe looking at things not just through, is this, can this make money and can we do this, but what is this? What is this for the customer? Is this a net good for the customer, and what's it going to look like to them?
Do they want it?
Yeah.
I mean, I've asked that question numerous times over the years. We come up with these ideas of new products to take to market, and you look at it and you go, well, is this really something our clients want? I don't know. Have we used, and you hit upon this as well, and we've talked about it before on the data management side. Do we use the data to help us get some sense of what, from a predictive standpoint and from what our clients are doing, to determine whether a product set that we're coming out with meets a need that we're finding in there?
And shockingly, 90+% of the institutions I've worked with have never even thought of that.
Don't do it.
That data is right there, and your customers' patterns are right there. Just thinking, maybe you want to think about that. And, we've talked for some time, and we'll talk about risk management in a second here, but at some level, risk management needs to start to become more predictive as well, and not just reactive. I think at some point, the banks need to be able to anticipate the needs of their customers and be ahead of that. We're not just selling the same stuff. I know you work with a number of banks. Have you seen anybody that's just doing anything really interesting or noteworthy?
On data management?
Well, no, just to differentiate anyway.
Yes, I think I told you about one bank that I know down in the Tennessee area. They've created and found a niche. They have a proprietary product that they've created, and they're using it to sell into a certain market segment. That's going to be their growth because they're first to the market. No one else has it, and the founder is a customer that was in that industry or niche that they're targeting. I think when banks identify a niche like that, I think that's a differentiator. I've always said, even on the lending side, as I grew up as on the commercial lending side and credit side, you needed to find areas that were a niche for you to grow, because you don't want to ever become over concentrated in certain things. But you also want something to differentiate yourself, because we're all selling the same thing.
Yep.
My money's as green as the next person.
Yeah, and I think, may not be right, maybe wrong, but I'd like to think that, again, with some of these new technology capabilities, people getting better at data and systems, we may start to see some banks getting clever and figuring out better ways to service our clients. Like I say, to extend extraordinary customer service beyond when you're in the branch or on the phone, because nobody's on the branch or on the phone anymore.
Not unless they have an issue.
And, again, I don't think we're there yet. Let's change gears a little bit. I mean, we talked briefly about the regulatory environment, and obviously with every administration, the wind shift. And it was predictable with this one. They've started to back off on some areas in some ways I'm very supportive of. But, look, this is the game we play. The tide turns and we just adapt to it. But, again, particularly you're relatively close to the DC world. What's your perspective on the regulatory environment and where we're at, where you think we're going?
I think it's always hard to predict. Obviously, the regulatory environment certainly for me seems like it has loosened up a little bit, not as tight. To your point, I think they're considering, making some changes there. I don't know that we're going to see wholesale changes. I just don't. Washington doesn't move that way, regardless of who's in office.
Yeah. Do you think in general the industry is overregulated?
I do.
Yeah.
I do. I think it has been for a long time. I think 2008 created a lot of that. Probably in some ways for good reason, given what was going on. But it wasn't just the banks. We lost sight of who else was participating in that.
Yep.
Downward trend in the real estate market. So, I think it's going to change. I think it's going to remain a little looser and a little lighter than it has been, which isn't a bad thing. I think it's a good thing. I think we've been overregulated and beat down as an industry for too long.
Yeah, and I want to and I do agree. In my initial kickoff podcast, I threw out some provocative comments, and they are comments that I will circle back with anybody that is familiar with the industry to be challenged. I would see people agree, disagree, but this is an area where, let's say, I've got some opinions, and again, I'm perfectly open to the possibility that I'm just completely off, but I've been advocating for some time that I don't see the value of the CFPB. I question whether it really is serving a material purpose. I have questions about its chartering, but that's sort of a different point. But to me, I've always felt that the existing supervisory agencies can handle consumer harm and consumer protection. I don't understand the purpose it serves, but again, maybe I'm wrong. Again, you've been in this game a long time. Do you agree? Do you disagree? And I'm perfectly fine with either.
I actually really agree. I've never seen or understood what purpose they really served. I should reframe that. They serve a purpose. I've never seen an outcome that really, I think, got to what the intent was.
Yeah, and one that couldn't have been achieved by existing agencies.
Which they have. I've worked in enough banks that we've had challenges on the mortgage side, on compliance, on, consumer harm. It's all there. I've experienced it before, CFPB, but I've never seen or never experienced the outcome of what I think they were intended to provide.
And then the other somewhat provocative, and I think this is becoming less provocative because the more people I talk to, the more people say, yeah, your mouth to God's ears, is do I really need 5+ supervisory agencies?
No.
And is it time for us to consider consolidating this into, 1 or 2 so that we could have some consistency of rules and oversight?
Wholeheartedly agree. I've worked at different banks where you've had FDIC, Fed, OCC. I mean, it's the world of acronyms. I mean, somebody tell me what they all do.
Yeah.
And then you've got every bank has its own state bank regulation. So I think the challenge there is I don't know that it'll get done under this administration, and I don't mean that as a shot at the administration. I just don't think Washington moves quickly enough to do something in a couple of years. But it does need an overhaul.
Well, and I think, at least from the priorities that we see for the administration, they kind of have bigger fish to fry right now. And this is maybe it's a bit of a don't fix what ain't broke. It is broke, but not as broke as other areas that need to be fixed.
Totally agree with that.
But I just feel like at some point we got to get smarter. And it surprises me when I talk to one bank and they say, our regulator was all up in arms about this. And you talk to me like, hey, I didn't even ask about that.
I've experienced that.
If we're gonna supervise an entire financial infrastructure, there's room to say we could do it better. So, and again, it just kind of bothers me when there is that inconsistency. So let's shift a little bit back to sort of internally into the kind of the world of sort of governance and risk management, because again, I think this is something that I've again been fairly vocal in saying we're not there yet. Now, aspects of governance I think we're pretty good at. We've been having boards for a long time, and I've seen some very, very good boards. So I think areas we're getting better there. I think risk management still has a long way to go, but one thing at a time. So, again, you've been in both an advisory role and in a leadership role, worked with a variety of different boards. What really makes a really strong board of directors?
I think it's having the balance inside the directors from a skill set standpoint, and having directors that have knowledge base that can assist management with understanding the risks that are posed in certain areas of the bank. Having someone that's understands technology, a couple of people. Community banks have typically been folks in the community, whether it's 3 or 4 lawyers, 3 or 4 business
Joe's
people.
tire shop owner.
Yeah, they don't add the value that I think banks need today.
Yeah.
Historically, boards they've had the fiduciary responsibility, but they've it's been more focused on their assistance with helping the bank grow, their stature in the community, their ability to bring people in, introduce them as potential customers, that type of thing. I think it has to be more skill based. I think there has to be more structure around it. I have a friend that she's put together a program to help refine the governance structure in community banks. She did it at a mutual bank that she worked for as the CEO, and I think it's a really tight program that allows banks to get to what the bigger banks have done for a long time. Community banks get to what the bigger banks have done for a long time, which is putting more structure around that, where there's a value add. They're governing. They're not operationally running the bank.
Yeah.
It's truly a governance structure. And community banks are moving that way. Still a ways to go for many, but I think that's what really defines a well-oiled machine from the standpoint of overall governance.
Yeah. Well, and the involvement question, that's always a sticky wicket, because I've seen everything from too hands off to too involved, and the equilibrium is art and science. But at some point, you're right, you need to be able to govern and oversee. And your point about skill set, I think, spot on, absolutely spot on. And I've seen a trend to bring in people with more technology understanding, because look, this is going to be more and more part of the banking world. I've seen some discussion around, well, you need people that have sort of broad risk management experience. The problem is not that many people have broad risk management experience. So for that, I've done quite a bit of board training, and the idea is bring some people in that can help sort of train them. And when I've done that, a big part of what I focused on was just getting them to ask the right questions. And we've talked about this. We often joke that the risk manager's 4 favorite words is what could go wrong. There may be some truth to that, but it's actually not the question that tends to yield very good information. The question that I tell boards is, you need to be instead asking, what are your assumptions? To me, that's always where the money is. I've said for years, risk always lies in the assumptions. Why do you assume this strategy is good? Why do you assume that risk is not as bigger than you think? Why do you think you can mitigate it? And it goes back to what you said earlier, be curious. And I don't think it would be out of line to say there's some great boards, but do they ask enough questions? One of which being, what are your assumptions? So, again, given that it's not like there's this massive pool of people that have deep enterprise and operational risk management experience, so every board should be looking to bring in some outside expertise periodically to, give some training and do some of this coaching into how to be effective.
Absolutely. And I think from the board standpoint, it's just what you said, be curious, ask a lot of questions. That's how you're going to learn. That's how you're going to understand whatever technical area you're talking about. And they need to do more of that. I read recently that that's one of the roles as a CEO. It took me a little while to figure it out when I was first starting out, was that the board asks you a lot of questions. It doesn't mean that they think you're doing everything wrong. It means they just need to understand what you're doing, how you're doing it, what are the assumptions behind it, is it really where we want to go, helping you think through it differently.
Yeah.
It's not just because they're going, well, you're it's a flawed strategy, you're an idiot.
Well, that's why I've always liked that question, because I've met directors that, look, they had their knowledge lane, and they may be good at overall governance, but if management comes to them, we want to do this, and sometimes they're a little insecure. God, I want to ask a question, but I don't want to look stupid. Well, if you're going to go down the technical lane, you're probably going to look stupid. Now, some people don't mind that. I don't mind looking stupid. I do it all the time. But I appreciate that not everybody has that gene.
Yeah.
But instead saying, okay, tell me about your assumptions on this. It's a much more depersonalized way to sort of unearth where there may be aspects you want to say, okay, say that again. You think what now? and make people kind of rationalize what they're doing. Do you see the board's role evolving, changing at all?
I do. I think it has to change in the aspect of, from the pure governance standpoint, overseeing it all, but I think even more so with the changes that are coming at the industry, the technology side, the AI side, the data management, all of these pieces, their role needs to change from the standpoint of being really okay with challenging management and management being okay with being challenged.
Yep.
Typically I've seen in the past where it's just like, well, this is how we've always done it, so we should just keep doing it that way. You're not going to survive in this industry and in this climate long term if you take that tact.
I think that is absolutely a brilliant point. And I've seen many cases where you go before the board, whether it's a risk committee or a strategy committee or whatever, and management gave a credible and convincing presentation. And we went, okay, do you have the ability to challenge, to be that credible challenge, to ask hard questions, to go beyond the pretty PowerPoint, that they sold you? I want to ask what is a dangerous question, but I have to benefit by your knowledge. Is, describe for me what is a healthy relationship between the CEO and the board?
Again, I think it's one where they challenge you and you're okay with it. There are a fair number of people that have, human nature. Your ego gets bruised easily or can get bruised by just being challenged. You have to have thick skin. Yeah. I worked for a woman that used to look at me all the time and go, "Turtle up." And she taught me more about leadership and life than any person I ever worked for. But she just look at you and go, "You're not a victim. Stop whining. And by the way, turtle up a little bit."
I love that.
And it always resonated with me because you have to be able to take that as a CEO. You're sitting there, you're the ultimate decision maker, and the board is challenging you. You can't let it bruise your ego.
Yeah.
Even if it makes a shift.
Yeah.
And you go, well, we're not going this way now because you've brought things to light that make me think about it differently. And I think we're going to go this way or not at all.
Yeah. Yeah. I think the core of that is absolutely spot on. There has to be an open, honest dialogue. And
it has to be two-way too.
Put the egos aside and have a dialogue and look, we're all right. We're all wrong. But let's wrestle with this.
Yes, absolutely.
And I think anytime you get one voice that becomes overpowering, this is not sustainable.
No, it's not.
At some point, this is not going to work. Going beyond the board, obviously the other kind of governing elements, particularly like committees. Look, I loathe committees. For God so loved the world, he didn't send a committee. But I love some committees, and I think some serve a very important role. And I've advised a lot of institutions on setting like risk committees. Principal focus being, if all you're going to do is make this a forum to inform people of stuff, don't waste your time. Send a memo.
Absolutely.
You need to be structuring your discussions around very forward-looking agendas. Where are we going and how do we feel about it? Mm-hmm. So maybe you could talk a little bit about some best practices you've seen, around the committee structure, both at the board and the management level.
Yeah, we did some work for a bank recently. I worked with another couple of folks, and one of the things I was floored by was when they shared with us a flow chart of their committee structure mostly on the risk side for the board, the holding company board, the board, and the bank. There were so many lines, Eric, I couldn't follow. And then you heard the bank has 40 or 50 people that attend their risk management committee.
God, no.
So,
and that's that's a keeping people informed environment,
that's
which is
an informed environment.
Not what it's made for.
Yeah, the best practice is to keep it to key people that really need to have input and are not afraid to provide the challenge and ask the hard questions. Again, what are your assumptions? How did you arrive at this? How do we get to these risk factors? What goes into them?
Yep.
And what does that tell us? And, you and I have talked a lot about this. The industry is starting to evolve, but it's really slow.
Yeah, I absolutely agree. And let's broaden this discussion to just risk management in general. And I've been fairly, open to the fact that I think there's a lot of well-intentioned but underperforming programs Because again, I think they're grounded in some of the wrong priorities. But let's start positive. And you've worked with a number of institutions. You've advised clients on their risk programs. What have you seen that banks are doing really well?
First and foremost, the adoption of enterprise risk management. The regulators pushed on it probably 10 plus years ago. They really started to push hard on it. Banks were very slow to adopt it, at least community banks were that I was affiliated with. As time went on, they started to realize that they needed to adopt it. And part of that is just, I need to understand where my risks are. How do I control them? How do I analyze them? But I think unfortunately what happens with a lot of that is I think that many banks just went to, let's check the box.
Yeah.
We measured it. We're okay.
Yeah.
We measured it. Oh, we're not okay. Let's just change something and that'll make it come back down. It hasn't been used the way I know you're pushing and adopting your program around, which is to, use it as an indicator helping go forward. How does this help me make better decisions? Not just an audit of where we've been from a risk standpoint. But I think the banks have been quick to adopt in the last 5 to 6 years and know that they really need a good, solid risk program. And part of that is just driven by the environment.
Yep.
I mean, it's technology, the things that are changing, the digital world. I mean, it's all new.
Well, and I've said many, many times, I think too many programs, you're majoring in the minors. It's focusing on nitty operational risks because people sort of understand an audit world, what's the process and what are the controls. And so the risk management ends up just being more layers on that. Mm-hmm. And it is surprising to me how many institutions I've talked to or advised when we talked about their program. And as you said, I've asked, is the program helping you make better business decisions? And no one has ever said yes. But I say, okay, tell me where your program is grounded, where it's focused. And I get a lot of, it helps us look at our processes and our controls. Okay, that's what audit does. And I said, how much of it is looking at some of your more strategic risks? And the answer is often, well, we're going to get to that. When? I mean, that's the stuff that could break your back. Mm-hmm. Why are you not factoring? I think part of it is, you can check my thinking, is, those can be, trickier to assess. They also involve some of the suits that don't always necessarily like being questioned. Mm-hmm. But to me, you're not really doing enterprise risk management if your program is not capturing some of the really material strategic risks.
Oh, totally agree. And I think the hesitation is a human nature hesitation. I'm not quite sure how to tackle it.
Yeah.
I'm not quite sure how to change it. So we'll just put it off till next year. We'll put it on the list for moving to the top next year. We got other things we need to deal with.
Yeah, you're absolutely right. And to be blatantly self-promoting, because I can, again, just a note on the YouTube channel that you can get to. The initial series of videos on there was, are we doing this all wrong? And that was very much born out of a consistent frustration of people saying, we're spending all this money, spending all this time, we're taking out people's time, and we're not getting any value out of this.
Exactly.
Well, there's a real good reason, because you're doing it wrong, and you're focusing on the wrong priorities. So I think there's a lot of room to be done, here. And I've also seen from the CEO, candidly, some different perspectives on what the CEO thinks the risk program is for, what they think the CRO is for, and some I've seen where they see the CRO as a box checker, and frankly, a little more than just keep us out of trouble with the regulators, and that's so problematic at so many levels. So again, put yourself in the CEO position, and what is your relationship with the CRO? What kind of person are you looking for? And what do you see as that ongoing relationship?
I think that I would be looking for someone that's very strategic in terms of their mindset. I mean, that has to be the beginning or that starting point. Someone that's open-minded, someone that's not afraid to speak their mind, share things that may be unpopular. It's similar to what I think the CFO role has always been. It's the conscience for a CEO. I always view my CFO as my conscience to make sure I don't get in trouble from some stupid idea that I come up with. I think the same can be said for a CRO. They can be the chief strategic officer, if you want to call them something different. But they have to be very strategy minded about, what's the industry going to look like and how is that going to impact us? How are we going to accept it, adopt it, or reject it? And still remain competitive. So I think it's a key position, like a CFO, that I think is starting to really ramp up for many banks.
And it's been my concern where it's not seen as a senior leadership position. And I'm assuming then you would agree that, going back to the culture point, that the CEO needs to set the tone that the CRO is part of our leadership team.
Absolutely.
They're sure to challenge us. Certainly, I always sort of pull from the heightened standards that the CRO, in many ways, the risk program is two primary functions: help architect the framework, and then be able to provide credible challenge. Doesn't mean they aren't at times a subject matter expert that can weigh in, but they need to be able to provide challenge. And if the CEO does not set the tone that their job is to challenge us, that person's life is going to be miserable, and they'll never succeed.
I agree.
Totally agree. To me, that's got to be something the CEO has to plow the road for them.
Absolutely. And in today's environment, it's even more important with what's coming at us as an industry.
Well, exactly. I mean, with so much changing, fair to say that a strong risk management program is going to help us navigate this change.
Absolutely.
And if it's not helping us navigate, it's not there yet.
It's not there yet, is right. Because we do need that in order to navigate the change, because it is coming at us fast and furious as an industry. And, again, that's probably one of the key components for a CEO, is to make sure they have the talent that they need in different facets of the C-suite.
I absolutely agree. This is great. Just to sort of wrap this up, but again, we've covered a lot of ground. But again, you've seen the good, the bad, and the ugly. Any other words of wisdom to, the bankers out there?
Two things, and it focuses more on the M&A side, because I come back to that, is make sure that you're looking at the culture attached to the organization that you're looking to either merge with or acquire. Either way, it can make or break your combination of the two organizations. And you have to do that beyond just a surface look. You have to delve into it, talk to their customers, talk to their people inside the organization, go into a branch and experience something, go online and have an experience, figure out what the culture is really like, and does it meld with yours? Because to your point earlier, I've never seen an acquisition that didn't make sense on paper. They don't do them.
Right.
If you can't absolutely make financial sense of it, you're not going to do it. But the culture thing is something we don't spend enough time on.
Yeah, I've seen that movie where they didn't consider it, and it always ends in tears.
Oh, I've seen it numerous times, and it was brutal. I've lived through it, and it was awful.
I absolutely agree. Any other, again, pearls of wisdom?
Accept the change that's coming at us.
Oh, God, your mouth at God's ears.
This is just one of those times where I look at it and go, this is really exciting.
Yeah.
Don't look at it as a banker. I wish I was 20 years younger, because I would love to be starting into this 20 years ago. That it's just, there's so much opportunity created from the challenges and changes that are coming. Like you said earlier, we don't adopt everything. We can't.
Yeah.
But you have to be able to go through and weed out what you think you need, don't need, want, don't want, and hit it head on. Go after it.
Yeah. I absolutely agree, and I do think these are really interesting times. And we've talked for a long time. I've said this for many years. I think banking is going to be really changing, and banking could look different in 10 years. And so the question is that, how are we going to adapt and change and evolve and maintain our position? And it's a really interesting time.
It is. It is going to change.
Yeah.
It's going to look very different in 10 years. Through my career, the changes that took place took longer, but I think that was a function of not having or seeing the kind of technology we have today.
Yeah.
I think what you're going to see going forward is the changes becoming more rapid and quicker. So 10 years from now, you're going to see changes that probably took 20 years back when I started out.
Every new change, the adoption rate becomes shorter and shorter and shorter.
Absolutely.
So, well, Sam, thank you so much. I truly appreciate your wisdom.
Eric, thanks.
So
I
thanks for
really
being here
enjoyed
today.
this.
If you'd like to get in touch with Sam to possibly provide advisory services to you, just send us an email at ermadvantage@gmail.com. Thanks for listening.
The ERM Advantage podcast is recorded at Lightshed Studios, Philadelphia, Pennsylvania. Copyright 2026 ERM Advantage LLC, all rights reserved. To inquire about appearing on the podcast, please contact us at ermadvantage@gmail.com.